Why are crude oil prices under so much pressure?
We have seen quite a severe break in the crude oil prices. First of all, we had the price war between Russia and the Saudis. Now we have an ongoing supply issue, and it appears that there is a storage problem, not to mention the weakening global economy. So the crude oil now falling to its lowest level since 1999. Looks like there may not be recovery until in the third quarter or the fourth quarter, at least when there is some type of recovery in the global economy, and I would lean more toward the fourth quarter.
What are the implications of the yield curve turning more normal after being inverted earlier this year?
Earlier this year, the yield curve here in the U.S. was rather severely inverted. In fact, it was inverted globally, but since then, with the aid of central banks around the world adding more accommodation, yield curves have become more normal. And that, I believe, bodes well for the long-term economic outlook. And I must stress long-term, possibly in the third quarter, fourth quarter, there could be some recovery. And that would help a lot of these markets in general. As we mentioned, the crude oil would be supported, I think, at that point. So there is some hope on the horizon with the yield curve turning more optimistic. But once again, it may take several months, probably in the fourth quarter, for a better recovery in the U.S. economy.
What are the main fundamentals for the gold market?
The gold market actually has performed very well as of late. There were a few days when all assets were liquidated. These were periods when there were severe declines in the equity markets, when everything was liquidated to raise cash. Since then, though, when the lows were made on March 23rd, the gold market has rallied as much as $335. Of course, giving back a little bit more recently. The technicals seem more favorable to the gold market. We do have central banks continuing to buy gold. Of course, we do have the ongoing interest rates, which remain very supportive. In fact, negative yields in much of Europe and in Japan are very supportive. This puts gold at a positive yield compared to interest rates that are negative around the world. So the outlook for gold, I believe, is still very encouraging, and I would anticipate higher prices.
What did the USDA say in their April U.S. World Supply Demand Report?
In April, the USDA lowered soybean exports 50 million bushels and the residual 24. They added crushed 20 million bushels, which raised the carryout 55 to 480. For next year, we're looking at a crop around 4.7 billion bushels, demand a little over 4.3 billion bushels, the carryout at 330. So the key in that is whether or not we get the export demand from China. So far, they have bought most of their needs through August from Brazil. Brazil, if you take in freight and also quality, is cheaper than U.S. For the corn market, the USDA lowered ethanol 375 million bushels and raised feed usage 150. So that raised the carryout 200 million bushels to 2092. Some people think that the ethanol number could even be lower, which could make the carryout higher. For 2021, looking at a crop a little bit over 15.7 billion bushels, demand for exports might be 2.1. Ethanol might bounce back to 5.4 depending upon the demand for fuel. And feed and residual may be 5.8, which would give us a carryout of 3.3 billion bushels. For the wheat, they lowered exports 15, and they lowered feed 15, which raised the carryout 30 million bushels to 970. If we have an 1840 crop and similar demand for wheat, the carryout could be 750.
What is the outlook for U.S. and world 2020 crop and weather?
As far as the weather is concerned, NOAA came out with a 90-day outlook that suggested that much of the U.S. Midwest will see normal rains and normal temperatures. The heat would be isolated to the far south, and the dryness also to the far south. Now, we did look at a 8 to 14-day map that cuts the country right in half. The western half of the Corn Belt looks to be warmer and drier, which should allow for planting, while the eastern half and the southern southeast is going to remain wet, and the northeast cool. I think all in all, this will help the overall plantings of corn and beans, which offers resistance to the marketplace.
Should U.S. farmers sell current and new crop corn, soybean, and wheat cash prices?
I think you have to kind of look at the outlook down long term as far as demand. It still seems to be dropping. And if we have normal weather, prices could go lower. I mean, we could see these corn below $3. We could see November beans below $8. And wheat would probably follow the corn market. So yes, the answer is yes. Farmers should sell their inventories they have, and they should start selling 2020 crop. And if they want to, if the weather turns bad, they can replace what they've sold with call options. The volatility is low, the premiums are low, and this is something that they can do probably in late May or early June.
What is the U.S. Ag Aid Program? When is sign up?
USDA is putting a package together worth $19 billion for aid to U.S. farmers. $3 billion is direct purchases of fresh produce, dairy, and meat products for food banks. There's $9.6 billion for livestock, $3 billion for crops, $2 billion for fruit and vegetables, and $500 million for niche products. There will be one-time payment based on the formula detailing price losses from January 1 to April 15th, and you'll receive 85% of that loss. There will be a limit to $125,000 for each commodity and $250,000 cap for individual entity. Ethanol did not get any aid. Cotton, so far, they forecast lost $3 billion, pork $5 billion, and cattle $13.6 to $14.6 billion because of the slowdown in demand. Sign-up starts in early May. Payments will start late May and early June.
The views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.